Welcome to Taking Stock. I'm Amanda Lang. Coming up, the Prime Minister's out making trade deals. Are Canadian businesses ready? And is Canada really poorer than Alabama? We'll debate. Plus, property rights in an age of reconciliation. That's all ahead. First, for the week that was in business, it's time for the briefs. Markets were rattled by the increasing hostilities in the Middle East, with the threat of inflation as the newest worry for investors. For many investors, the chaos may have been an opportunity to take profit after solid increases in equities in 2025. So far, 2026 has been one of lackluster returns across major stock markets, even before the turmoil of war. Oil prices did surge as a bottleneck in the Strait of Hormuz kept supply in check. Still, prices moderated thanks to strong supply elsewhere. Oil stocks and defense companies did better than the overall market, seen as they are as beneficiaries of a prolonged conflict. But the inflationary impact of higher oil could weigh on stocks overall and could definitely keep central banks, including Canada's, on the sideline rather than moving to cut rates. Prime Minister Carney signed a series of trade agreements with India that included a $2.6 billion supply agreement with Saskatchewan's Cameco to supply uranium to India's nuclear energy sector. The visit was seen as a broad reset of relations between India and Canada, with a goal of negotiating a broader trade agreement. A major mining conference in Toronto was the backdrop for new project funding announcements in the sector from the federal government, and the Ontario government stepped up its work on road access to Ontario's Ring of Fire. The total investment by Ottawa is $12 billion across 30 new partnerships in 10 countries. Iconic Canadian retailer Roots has launched a corporate review that could wind up in the sale of the firm. The brand went public in 2017 but struggled to find traction in the U.S. market. Mid-market brands like Roots continue to struggle in an atmosphere of consumer restraint. And those are your business briefs. With the Prime Minister out deal-making, are Canadian businesses ready to take advantage? Stuart Bergman is Chief Economist of Export Development Canada. Thanks for being with us, Stuart.
My pleasure. Thanks for having me again, Amanda.
And it's good timing to talk. You've got your updated trade confidence index out. So let's start with how businesses are feeling about trade right now.
Sure. Well, look, what we found is our index was up. It was up 4 points. But, in terms of just a little bit of context, it was up after its lowest score or rather its fourth lowest score in history. So it's up, but it's up from a fairly low base, and it's still well below the historical average of 72.4 points. So while to us the increase does suggest some early signs of recovery, it's clear that exporters are very much bracing for ongoing volatility, and it seems that they're approaching the next 6 months, the next 2 years, with caution rather than optimism. Now, I will say on the positive side, it's also clear that exporters aren't just sitting and sort of waiting around for things to get better. So they are very much adapting to the instability, and in doing that, sort of showcasing their resilience. The results on diversification are a good example of that.
And EDC is really well placed to answer the question of, if we do a trade deal, does trade naturally follow? Because we already have trade deals, right? We've got 15 of them, but we don't actually trade much beyond the U.S. We're trying to do better. Does a trade deal with India, if that should happen, open the floodgates, or do businesses need more help than that?
Sure. Well, let's deal with the question first on trade deals. I think naturally, a trade deal increases comfort level with the market. It means that the government is certainly putting more resources. We have more folks in market, and we develop a little bit more of an understanding of how things function in whatever local market you're talking about. What we have found, unfortunately, in our latest trade confidence index, is that while the free trade agreements really help address some of these barriers for exporters, to a large extent, they remain under-leveraged. And so 29% of eligible exporters who responded to the survey actually reported that they're not leveraging FTAs. So they would be exporters that are eligible to use FTAs in their particular markets aren't actually leveraging them, despite the fact that almost 70% of respondents actually say that the FTAs influence where they do business, but they're still not actually leveraging them to the full extent. And so, there's lots of talk these days about trade enabling infrastructure. I would sort of look at this as part of that infrastructure, right? This is sort of the policy infrastructure, and we'd love to see exporters take more advantage. We're doing what we can to increase awareness around many of these free trade agreements. We've got, free trade agreements that cover exporter access with over 51 countries. That includes CUSMA, CETA, CPTPP, and a number of others.
And I guess this is what you do, but I've been surprised when I've dug into some of EDC's already existing programs in various regions, including in South America. There are really good infrastructure in place from you to help, a CPG company get down to a brand new market in a safe way, because it often feels very risky. How do you get the word out? And do you think that the trade situation and all its uncertainty will help businesses actually start to think this way?
Yeah, look, I do think it helps. Businesses have certainly come around to the idea that in this increasingly volatile environment, the best way for businesses to guard against uncertainty, to guard against volatility, is what I like to say the only free lunch in economics, which is diversification. And so they are digging into diversification. We see that the exporters, in fact, that I talk to on an anecdotal basis, are very much leveraging diverse markets to manage single market risk. But it is really about sort of putting more of those programs that you refer to in front of them. EDC continues to open a number of offices or new representations in new markets. We've identified a number of priority markets for our exporters. We've opened representations across the Asia Pacific region, as an example, over the last 2 years. That brings us to a total of 26 foreign representations around the world, including Singapore, which is our Indo-Pacific regional headquarters. We're also looking to expand our presence in Europe later this year. So we're really looking to do our part in sort of expanding that policy infrastructure, if you will, that enables more diversification from Canadian exporters.
Literally 10 seconds here, but do you expect that confidence index to keep rising? Would you hope that that will happen?
As things start to improve, as we really kind of dig into this diversification plan, and you see that the Prime Minister is out there visiting a number of high potential markets, I would expect to start to see confidence build on the back of that. Absolutely.
So good to have you, Stuart. Appreciate your time.
Pleasure for being here. Thank you, Amanda.
Stuart Bergman is Chief Economist of Export Development Canada. Still ahead, Canada's per capita GDP has some people wringing their hands in worry, but are we looking at the right measures? Stay with us. Welcome back. What's the best way to measure the strength or weakness of our economy? Here's what you need to know. The most used metric is GDP, a crude figure that is a measure of total economic output, or all the goods and services produced in 1 year. Its components are consumption or household spending, investment by business, but including new housing, government spending, including infrastructure, and net exports, which is exports minus imports. GDP may be a useful benchmark against ourselves over time or against other countries, but it has its weaknesses. It doesn't capture unpaid work like household labor or volunteering, or the underground market, which is worth tens of billions. It also misses quality of life and metrics that matter, like income distribution and sustainability. And like any blunt instrument, GDP can be misleading. Economic activity is seen as only good, but if it's rebuilding infrastructure after a devastating event like a fire or a flood, it's hardly a positive. And per capita GDP, which gets a lot of attention, is even more misleading. Sudden increases in immigration, as happened in Canada in recent years, makes per capita GDP look worse in the short term, ignoring that immigration tends to lead to higher growth within a few years. StatsCan has developed the quality of life framework, 91 indicators organized into 5 domains: prosperity, good governance, health, society, and the environment. GDP per capita is included in the prosperity category, but it's one of many factors, and some of the others are highly subjective. The biggest weakness of GDP as a measure, though, is it's old school and fails to capture digital value, including the huge benefits of free services like Google or Wikipedia, and also the use of digital tools in the creator economy. Maybe the problem with how we see the Canadian economy lies with how we measure it. So how does Canada stack up on measures that go beyond GDP? Jim Stanford is director of the Centre for Future Work. Jim, thanks for being with us.
My pleasure, Amanda.
This has stirred up a lot of debate because we've all seen the headlines that Canada on a per capita basis is as poor as Alabama. Is GDP even a number to look at, is where I want to start with you. Are we measuring it in the right way?
Well, I think your introduction highlighted some of the cautions that we have to keep in mind when we think about GDP. But GDP is clearly a relevant and important indicator. It shows you the total value of goods and services produced for money in the economy. And that's important, and it's worth keeping track of. What you should never, ever, ever do, though, Amanda, is assume that that is the scorecard against which your whole performance as a society is measured. That is quite wrong. GDP alone does not tell you the full story about what we're producing, what we're using it for, and who gets what. Those things are all incredibly important to quality of life, and the GDP number alone doesn't tell you about those.
It sure doesn't. And it also, of course, misses huge swaths of the economy. I had a hard time distilling that into a few words, but it really is an enormous part of what we're not capturing. And maybe, Jim, I find that interesting because it leads me to wonder whether that's the gap we feel, where life's pretty good here, and yet we're told that our GDP metrics are poor.
Yeah, I think that's true. And frankly, I mean, we operate in a very politicized environment, don't we, Amanda? And so different folks will use different metrics and kind of weaponize them in different ways, depending on the moment and what they're fighting for. And I do think that's a big part of this infatuation we've seen with GDP per capita and how Canada supposedly ranks at the bottom of the industrialized world by that metric. And it's just wrong, and it's clearly ideologically motivated over the past few years as our political debates became more polarized. So I think it's important to choose the right metric, address the right questions with those metrics, and then think carefully about the context in which the debate is unfolding.
Of course, one reason to understand our economy is that when our leaders make policy decisions, Jim, we understand why they're being made and how they apply. In our country, of course, GDP can be skewed by a couple of big categories, right? We are a huge producer of resources, especially oil and gas. We have a huge financial sector. Are we actually measuring kind of the real value of the work that most Canadians do day in and day out?
Not necessarily, and we may be undervaluing things that either don't exchange money in the course of it. You mentioned care or labor in our homes and our communities. That's a very important part of our quality of life. It can include things that don't really matter to the average Canadian, and this is really important, I think, Amanda, in international comparisons. When you're looking at per capita GDP across different countries, you really have to look deep at what is showing up in those GDP numbers in other countries. A great example is Ireland. There's all kinds of commentators who say Canada should imitate Ireland because Ireland's per capita GDP is twice as high as Canada's, and it is very high. But anyone who's been to Ireland, and I have, it's a wonderful country. It's not rich. The average Irish person doesn't live any better than the average Canadian. That GDP number is skewed because of all the big global companies like Microsoft and Meta and Google and so on that have set up in Ireland to take advantage of low corporate tax rates. So the profits that they book in Ireland show up as Irish GDP, but the average Irish person hardly gets any of it. So both what it counts and what it doesn't count. GDP is a measure that has to be used with great caution.
And, of course, there is the fact that we can be the same size as a country in GDP, but actually use our resources totally differently. Are we doing a good job in Canada on that front? And by that, I mean, you know, we can look at kind of comparably sized nations with similarly sized economies that do much better on healthcare, or better at looking after their citizens in other ways. Could Canada be better with what it has rather than worrying about having more?
We certainly could, and there's no doubt about it. Now, I think in the grand comparison, Canada does relatively good. Here's one way that you could measure that. The United Nations has a measure, kind of like you mentioned, the one from Statistics Canada, that tries to measure quality of life. They call it the Human Development Index, and they use GDP per capita or something quite like it as one of the components, but they also look at healthcare and life expectancy and education. And inequality. And if you look at where Canada stands by the UN's Human Development Index, we rank more highly than we do according to GDP alone. So what that means is we're punching above our weight in terms of taking our GDP and translating it into actual human well-being. Other countries, the United States in particular, but some other countries that are high on GDP per capita, like Singapore, for example, or the Gulf states, which are very rich on per capita GDP, they underperform. Their human development is much lower than you would think, given the size of their GDP. So that's one kind of broad way to show that Canada's efforts through our tax system, our public healthcare system, our mostly public education system, other measures to address inequality and lift living standards are relatively good, but they could be much, much better. And even by the United Nations standard, which is broader, Canada has been slipping. We're now 16th in that ranking. And I think given our potential and our resources and our social capital, really, we could be doing better.
We've got to leave it there, Jim. So good to have you for this. Appreciate your time.
Thank you very much.
Jim Stanford is the director of the Center for Future Work. Well, whatever you think of how we measure our economy, it sure turned heads when Canada was compared unfavorably to Alabama. So where do we do better and where must we do better? Mike Moffat is founding director of the Missing Middle Initiative. Mike, thanks for being with us.
Oh, thank you for having me.
So let's start with this notion of, the kind of crisis in per capita GDP. Has it been overblown, or do you think Canadians should look at metrics like that and take them very seriously?
No, I think it's a very serious metric. Now, it's not everything when it comes to well-being. It simply measures the amount of output of a country divided by the population. But we need that output to pay for all the things that we care about, our schools, our hospitals, all of our standard of living, and so on. So while GDP isn't everything, it's certainly strongly correlated with everything.
One of the reasons this story really kind of jumped out at me is when I first saw it, and this is a long time ago, right? It was, I don't know, a year and a half ago. Our friend Trevor Tombe at the University of Calgary kind of came up with this data. And I thought, well, maybe, sure, I'm sure he's right. It doesn't feel like I'm living in Alabama, having been there. It feels like the prospects here are better, that our life is better, that our mobility, all a bunch of metrics. Can these metrics be abused, or is it still a useful guide to kind of wake us up and say, just be a little cautious?
Well, I still think it's a very useful guide. I do think Canadians a little bit have some outdated stereotypes when it comes to Alabama, but I also think it's worth looking at other metrics. It's worth looking at inequality, life expectancy, and so on. And although Canada ranks relatively well compared to Alabama on those things, we actually lag behind a lot of countries, particularly in Western Europe, who kind of view us the same way that we might view Alabama. So, I don't think necessarily adding extra economic indicators into the mix necessarily makes Canada look better compared to our global peers. In fact, in many cases, it's the opposite.
And in fact, Jim was just talking about the Human Development Index. We have slipped in those rankings. So if we care about kind of using metrics because we can compare them year to year and over time, we are doing worse than we used to do, Mike. And you spend a lot of time looking at this, about what's going on in Canada that's sort of eroding. Is it the base? Is it the center? But it's the missing middle. What's happening?
Yeah, absolutely. So the UN Human Development Index the first one was in 1990, and back in the 90s, we were consistently in the top 5. Over time, we've slipped down to 16th place. Now, the standard of living in Canada has improved over that time, but other countries have improved faster. Where Canada does particularly poorly is on questions around inequality, housing affordability, which should come as no surprise, gender wage gaps. We haven't made the progress there that we've seen in other countries. So although there are some areas we do well in, like household wealth, which is partly a function of high home prices, there are these other metrics where we are either getting worse or not as improving as much as our global counterparts.
What is the best fix for that? If what we want to do is grow our economy, major resource projects are great. They will certainly bump up our GDP, but they won't necessarily help the folks that you're talking about here.
Well, but I think they're related. I think the easiest thing for Canada to do would be to get out of our own way. Whether or not that's building a new energy project or being able to put an addition on your house or being able to, build new housing in our cities, that we are our worst own enemies at some time. So it's not, these other countries that are holding us down, but we're preventing ourselves through taxes and regulations from doing the very things we need to do in order to succeed. And the irony is that we put in a lot of these rules to, help the middle class, help low income folks, but we're seeing that over time they're actually leading to increased inequality as young people can't find a home, can't move to another city and take a great new job because they're stuck in place.
You've been doing this for a little while. We don't have a ton of time, but are you more optimistic about tackling some of these issues than you were when you started, or less?
I'm more, and it's not necessarily because we've made progress on it, but I think we're at the first step of the 12-step process where we're admitting that we have a problem. So I am optimistic. We are seeing, the federal government is trying to advance infrastructure projects. We see municipalities trying to make changes to make it easier to build housing. Those haven't necessarily borne fruit yet, but we are, admitting we have a problem and starting to make the reforms necessary to improve.
First step's the hardest. Great to have you, Mike. Appreciate it.
No, thank you for having me.
Mike Moffat is founding director of the Missing Middle Initiative. Coming up, a landmark agreement with the BC First Nations is kicking up concern. That's still ahead. But first, British Columbia has followed through on a long-standing promise or threat to do away with daylight savings. When the clocks spring forward this Sunday, it will be the last time they move in that province. While the majority of people are in favor of the move, a majority also believes it shouldn't happen in isolation, which is in fact what's happening. BC will be on a different time zone from its southern neighbors for half the year. Hard to know why BC decided it was right to do it now, but we assume they decided it was time. We're back after this. Time for the takeaway, and when possession is not, in fact, 9/10 of the law. The agreement between the Musqueam First Nation of British Columbia and the federal government took some by surprise. Not so much that an agreement was reached, since the law in BC has been gradually pointing in the direction of Indigenous title for years. A few recent landmark rulings there, most notably the Cowichan ruling, which ceded title of large swaths of the Lower Mainland to that First Nation, have acted as a kind of heads up that BC was in for some major deal-making. The terms of this deal were not made public until after the fact. The agreement signed between nations, Canada and the Musqueam. But it opens the door to a new wave of uncertainty in BC around fee simple property rights. So far, none of the victorious Indigenous groups have suggested that they want to seize land, and in fact, they've said the opposite. The Cowichan First Nation said it would respect property rights. But that means there will be a complicated legal and financial settlement ahead. The federal government is the right body to do the negotiating, but in this case, the lack of transparency is a weakness. Canadians across the country should be paying attention to the legal evolution in BC, particularly in the many other regions that are unceded territories with not even the Treaty of the Day, however inferior it might be deemed by today's standards, as a protection. What do Canadians think about this gradual legal evolution? Hard to know, because it's not a subject that's open to debate. In the name of reconciliation, any questions of business or economic interests are relegated to the sordid back seat. But one thing we do know is that the law is like a brick wall, with the stone of each new argument and decision resting on the last. If Canadians don't like the shape of the wall, it's not the courts they should look to, but government. Only government can redirect by tearing down the wall with new legislation or by introducing new laws and standards that will shape how it gets built. My takeaway? Canadians look to our government to update our legislation in ways that work for all, and we have to have an open debate about those laws. A complete lack of transparency around settlements is a move in the wrong direction. That's Taking Stock for this week. I'm Amanda Lang. Thanks for being with us.